Okay, in this video we're going to be looking at the purpose of economic activity, what is economic activity, and then how economic activity can be reflected in the circular flow model, and how economic activity has an impact, both positive and negative, on both material and non-material living standards. So when we're looking at the term economic activity, we're talking about the process of producing goods and services, where we use resources and convert them into finished goods and services. So it's the production process that occurs to generate goods and services, and economic activity can be reflected in either production, total income, or total expenditure within an economy. So when we're looking at a country's GDP, we can be measured using either production, income, or expenditure. And it's important to remember that production is the process of making goods and services, income involves giving money to those involved in that production process, and then expenditure is the spending of income on goods and services. And they're all measures of economic activity. So when we're looking at economic activity, all of these things, production, income, and expenditure, are all examples of economic activity within a nation. And essentially what should happen is that the three different flows should be very similar. So for example, if income increases, people are generating more income, that should lead to more expenditure, which will flow on to more production to meet that expenditure. So Australia will need to produce more, because we're assuming this is production of Australian goods and services and expenditure on Australian goods and services. So if there's more spending on Australian goods and services, we need to produce more to meet that demand. And if there's more production, we need to get more workers or more labour, and that should generate higher incomes. So this is a more technical circular flow model, and it's important for you to recognise the four flows within this circular flow model. Because when you get given an impact, so you say, if I say to you taxes decrease, or I say to you that interest rates increase, or the exchange rate changes, or something like the global financial crisis, you need to be able to explain how it impacts Australia through this circular flow model. So the first flow, flow one, is it goes from the household sector to the business sector. When we're talking about the household sector, we're talking about those 24 million people that live in Australia, and they provide their factors of production. They provide labour, land, capital, and entrepreneurship to the business sector. So the first flow is just the flow of resources from the household sector to the business sector. The second flow is the flow of income. So income is returned back to the household sector for providing these services, and that income can include wages or salaries. So wages are paid on an hourly basis. Salaries are generally for professionals that get, say, a salary of $70,000 or $100,000 or $200,000 a year. Rent, if you're letting people use property. Interest and profits are all examples of income that flow from the business sector to the household sector. This flow of resources occurs in what we call the resource market, and then in the factor market there is expenditure on goods and services. So from the income we generate, that is spent on Australian goods and services. Now technically flow 2 and flow 3 are not exactly the same for many reasons. One, there will be taxes, so we don't spend all the money we earn. Some of it we spend on imports, so it's leaked away from the economy. And thirdly, we may save that income, so that not all the money that we spend will be not all the money we earn will be spent on goods and services, because some will be saved. So flow 3 is expenditure, which flows from the household sector to the business sector, and then flow 4 is total production. So if expenditure increases, that will increase production, and then flow 4, this is also measured in GDP. And flow 4 then flows on back to flow 1, which is your flow of factors of production. The more we produce, the more factors of production and more resources we need. So it doesn't matter what impact something has on this circular flow or what flow it affects, it will flow onto all the other flows within the circular flow model. So for example, if households collectively make a decision to cut their spending by 1,400 billion, that will affect flow 3. And then firms will decide to reduce the value of their production, flow 4, because there's less spending, and therefore GDP will fall by 1,400 billion. Because there's a reduction in production, that will flow back to flow 1 because we won't need as many resources. If we're not making as much, then we don't need as many resources, and then incomes flow and incomes fall in the economy as well because of the increase in unemployment and the lack of need for labour. So it flows through all the flows. Less expenditure flows onto less production, which flows on to reduced demand for resources, which flows on to reduced incomes throughout the economy. When you're talking about the household sector, we're talking about the 24 million Australians who are consumers of goods and services, and they also have a second function where they're the people that provide resources to the business sector. So the household sector is responsible for demanding goods and services in product markets and supplying their goods and services in resource markets. The business sector comprises around 2.5 large and small businesses that are responsible for producing goods and services. Most of them are privately owned. Some of those businesses would be part of the government sector as well. So all the big companies that demand resources and produce goods and services. That's the circular flow model again, just looks a little bit different. Flow of resources, flow of income, flow of spending, and then flow of production. You need to be able to articulate how certain things, and you don't need to know detail about these things at the moment, but how they can impact the circular flow model. So when we were talking about the GFC, for example, that reduced spending on Australian exports. It reduced spending by wealthy Australians because they lost money through their superannuation and their shares. That flowed on to less spending, which flowed on to reduced production, which would flow on to reduced demand for workers, which therefore increased unemployment, and then incomes went down, and again, that flowed on to reduced expenditure again. So you need to be able to articulate how things can impact this circular flow model. If we were to raise taxes, that would reduce spending, which would reduce production, reduce demand for resources, and reduce incomes. The four flows, the nation's supply of resources is the first one. So the household sector supplies to the business sector. The second flow, demand for resources and payment of income. Businesses buy or demand resources, and in exchange for that, workers receive an income. Flow 3, national spending on goods and services, the total spending. This will also be referred to as aggregate demand, the total aggregate demand for Australian goods and services. And then flow 4 is the production of final goods and services, or a nation's GDP. So when the spending by households increases, that leads to increased production throughout the economy and GDP increases. For an economy, the size of this flow of goods and services is commonly measured by gross domestic product, or GDP. The purpose of economic activity. Economic activity is used to describe the production process where we convert goods into resources into finished goods and services, and GDP is the total level of economic activity. So the most common measure of economic activity is GDP, the total value of finished goods and services produced in a year. And if GDP increases, assuming it increases by more than our population, then average income should increase, and therefore the total material living standards of a country should increase. When we're talking about economic activity, you need to be able to articulate the impact economic activity can have on both our material and non-material living standards. So when we're looking at material living standards are measured by GDP per capita, or income per person. So when the amount or real value of goods and services increases from one year to the next, the total national income increases. So if we can increase our real GDP, which means that basically we're producing more goods and services than the year before, once we take into account inflation, if that gets bigger, that should lead to increased incomes and hopefully increased incomes per person. So when the economy gets bigger as a result of economic growth, and therefore we're producing more efficiently, or we push out our PPF, that should lead to increased material living standards or income per person. Material living standards depends on how evenly income is distributed. It depends on whether there's high inflation, so if prices are going up by too much, then that can reduce material living standards, and the level of employment. Generally, when economic activity increases, that leads to increased incomes throughout the economy because there's more demand for workers, and the higher GDP per capita and higher material living standards. Non-material living standards, they're referred to as other quality of life factors other than just your income. So that can be personal happiness, pollution, the amount of leisure time you receive, crime, violence, family relationships, democracy, so whether you have a say in society, access to clean air, life expectancies and health, are all examples of non-material quality of life factors that are harder to quantify. With a lot of these factors, most of them will go up when economic activity and material living standards increase. So generally when there's better income per person, we have reduced crime because more people are affluent, and there's generally higher levels of crime amongst less affluent people. There's less family breakdowns because less people are worried about debt and people have got more money and income. It can lead to higher happiness and job satisfaction if more people are employed, and less incidences of depression and mental health issues associated with not being able to get a job. But having said that, it's not a direct correlation between higher economic activity and non-material living standards. So, for example, higher growth may lead to more pollution, so we may wipe out more of our non-renewable resources. It can cause climate change. It can cause increased stress and less leisure time if people are working harder. So there can be a negative correlation between higher economic activity and non-material living standards as well, which you need to be aware of. Thank you.